It's day 22 of my 100-day challenge of becoming a profitable day trader, and today something crazy happened. I've took a setup that I've been waiting for several days now, and the result completely changed how I look on trading. But before I show you the trade, let me quickly explain why I took it, because this one was different. Now, starting off at the daily chart, the day I took the trade was on this day right here, Tuesday. Coming into this day, our bias was actually bullish. Why? Because on Friday, October 10th, we took out these lows right here, completely manipulated to the downside and made our seasonal tendency low. In case you don't know, the index NQ usually makes a low in the fall of the year, so that's probably this one right here. So we took out the sell side liquidity, then we kind of consolidated and went sideways for several days. Then we experienced this huge fair value gap. So now coming into this day, our bias was bullish. We were targeting and we were near these all-time highs, so no reason to be bearish, right? Jumping down into the 1 hour chart, Tuesday started actually right here. We went a little bit to the upside during Asia and then dropped down in the beginning of the London session. We dropped down into this 1 hour fair value gap. So what I was expecting was a retracement down into this 1 hour fair value gap and then attacking the all-time highs. As you can see, we refined the 1 hour fair value gap with this 5-minute fair value gap. Don't forget to include the volume imbalance at the lower end of this fair value gap right here. And as you can see, price took out this liquidity right here, manipulated into the 1 hour and 5-minute refined fair value gap, and then we saw a market structure shift. Let's break it down further and drop down into the 1 minute chart where you can actually see setup. So now there are several things that we need to take into account, okay? First things first, we took out sell side liquidity. This is not only some random sell side liquidity. This is the London opening range low initial sell side liquidity. So this is a major time-based liquidity pool. Let's extend it forward. Now we took out this sell side liquidity at 310 roundabout and then had this beautiful market structure shift, leaving this beautiful fair value gap behind. Okay, we have relatively equal highs. We have a time-based liquidity sweep. We have retraced down into a higher time frame discount PD ray, this 1 hour or 5-minute refined fair value gap. And we also have a new day opening gap above us. Okay, so as you can see, there are numerous things that I take into account and that in the end led me to this trade. And for those of you who are passionately watching ICT and following him, watch this. Daily premium wick that we grade here. Now drop back down into 1 minute chart. Now what do you see? So this daily premium wick high level actually isn't on top of this fair value gap right here, at least not on a 1 minute chart. If you go back to the 2 minute chart, this becomes a high probability fair value gap according to ICT, and that's the reason why I trusted this 1 minute fair value gap. We also had a breaker and a huge order block, so it was just a no-brainer setup. Stop loss below the fair value gap, TP at new day opening gap high, which gives us a beautiful roundabout 2-to-1 risk to reward. And as you can see, here are the executions, entry on fair value gap high level, and then we had to take profits. Take profit number 1, this new day opening gap consequent encroachment. Take profit 2, the high level, and then I just left one contract on as a runner in case it wants to take out this liquidity, but as you can see, it didn't. That's actually what's changed my outlook on trading, because this showed me that you don't need to always go for risk it all or go broke. You don't need to have these big runs with 5-to-1 risk to reward or whatever. Look, if I just wanted to target this high, which actually would have been reasonable because we are attacking all-time highs. So this would have been reasonable to target these highs right here. But in the beginning, all it takes is actually a nice 1-to-1, 1.5-to-1, or maximum 2-to-1 risk to reward trade. You don't need these 50 or 100 point runs, okay? This is kind of a key moment in my understanding, because you don't know how often I found myself in a losing trade, which in the beginning actually was a profitable trade. I had profits unrealized, and how many times I just wanted to hold on to a big runner and hold on to these high risk to reward trades, when in the end all it takes to be profitable is just consistently make these 1-to-1 or 2-to-1 risk to reward trades. With that, you don't only conquer your fear of holding on to big runners, you actually also conquer your fear of getting into a trade, because as you can see right here, the market actually took my take profit in 1, 2, 3, 4, 5 minutes, 5 to 6 minutes. Okay, I didn't need to hold on to like a 30-minute trade or whatever. This was actually a huge turning point in my trading understanding. This may be something you want to take into account and maybe also implement in your trading. Another reason is you also don't even need to be right in your buys, and hence you don't have to be, or you don't have to have an advanced understanding of where the price or the market is wanting to go. Okay, as you can see, I thought we were targeting the all-time highs, but actually we didn't. If you zoom out for a moment, on Tuesday I thought, okay, maybe we go now for the all-time highs. We dropped down for another 2 or 3 days before we now took all-time highs on Fridays. Okay, so this is also another reason why taking these small wins and not demanding price to go for your terminus target. Okay, as you can see, my bias was wrong, but I'm profitable nevertheless. That should be a key point in your understanding. You don't need to be right to be profitable. Maybe that went completely over your head, but this is actually that's a huge point in terms of psychology and market understanding. Get this into your head and just try it out. For once in your life, don't try to trade like all these trading YouTube gurus on the internet and go for broke. Just be content with your 2-to-1, 1-to-1, or 1.5-to-1, and even a negative R. Okay, and trust me, you can be profitable trading negative R trades. I rather have 5 negative R trades profitable than having 1 3-to-1 risk to reward trades hits and then having another lose, then another win, then another lose. I think you get the point. This actually was just a nice little scalp, which in the end led me to approximately like $60 win. Yeah, as you can see, 18 plus 42 plus, yeah, not even $1. So total gain of $60 in 5 minutes. Not bad at all, I would say. And yeah, guys, now if you want to actually watch me live entering the trade, managing the trade, and writing it to the TP, then check out this YouTube short. I actually screen recorded this trade live. Definitely check that out, and I would say that's it, guys. I catch you in the next one. Be safe.